Welcome back everyone to a new weekly update. We're kicking off a fresh month and a fresh week with strong momentum in the markets, and there is a lot to unpack. The S&P 500 has entered price discovery, hitting fresh all-time highs without losing steam. It's managed to shake off the heavy April backdrop and regain momentum. And as always, this strength in equities is influencing Bitcoin and the broader crypto market. One of my core themes remains the correlation between global liquidity and Bitcoin. When we look at the M2 money supply and offset the chart by 90 days, Bitcoin's direction closely follows liquidity trends. While this chart won't give us an exact price forecast, it's a powerful tool for spotting the general trend and the flow of capital into risk assets. The dollar index remains firmly in the risk-on zone, and it's been here since the start of April. This tells us that fiat currencies are relatively weak, creating favorable conditions for allocating capital into risk-on assets like crypto. Dips in the DXY have lined up with surges in Bitcoin. Our comparison chart shows that pattern clearly, and right now the dollar remains soft, which is supportive for crypto markets and risk assets. Looking at Bitcoin's weekly chart with my fair value zones, we're still in the very expensive area. That's why I'm not currently favoring Bitcoin as a fresh long-term entry. When BTC trades this high above its 200-week moving average, I prefer to be cautious. Ethereum, on the other hand, has spent years in the cheap and very cheap zones, and now it's finally regaining momentum. Right now, Ethereum is in the fair value zone, which I define as the 100% extension from its 200-week moving average. On the Ethereum to Bitcoin chart, we can see Ethereum strengthening, though we're still far from the out-season peaks we saw in 2022. That said, the chart is showing a rounding bottom and a clear trend reversal in progress. Bitcoin dominance has started to drop after topping around 66%. Historically, these cycles last about 1,000 days, and that cycle appears to be complete finally. Statistically speaking, the probability of further drawdown in Bitcoin dominance is now as high as ever, which favors altcoin performance. The others chart showing us the crypto total market cap, excluding the top 10 cryptocurrencies, is still below its December highs, which means there's room for further upside before hitting significant resistance. Personally, I would not consider any drawdown or trend reversal as long as we are below 500 billion or at least 400 billion in others. Fear and Greed Index is at 60 today, just moving out of the neutral zone into the mild greed. For me, this is still a comfortable environment to invest. As long as we stay below the extreme greed zone, there's space for healthy growth, in my opinion. The FedWatch tool shows a 94% probability of a 25 basis point rate cut at the next semi-conditional meeting. This aligns with the current market optimism and supports the risk-on trend we're seeing in both traditional and crypto markets. Here are two headlines that stood out to me this week. Spot Ethereum ETFs recorded over 1 billion in daily net inflows, the highest ever in history. CME Ethereum futures volume hit a record 118 billion in July, signaling renewed institutional interest and market excitement around Ethereum. The macro trend remains bullish, of course. I'm in full risk-on mode for crypto, and I'm optimistic for risk assets. Between Bitcoin and altcoins, I favor Ethereum and smaller cap altcoins for higher potential upside. Please be careful with short positions. In euphoric markets, growth can turn parabolic and short squeezes can be brutal. That's all for today's week's update. If you found this useful, please make sure to leave a like and subscribe, and follow along for next week's macro and crypto breakdown.